Hello to everyone. My name is Prashant Tiwari, welcoming all to the another session of banking theory and practice. Right before we should start with this particular video, let us recall what we have covered so far, what we have done so far. So we have taken a bit idea about of what we have in our syllabus. In detail, we have discussed it, right? Another part of the presentations are that we have taken care of what we mean by banks, right? The banker and the customer. We have identified the various terminologies from where the word bank has been derived from, whether it was Italian, German, French, Latin, and all these kind of words, right? We have taken an idea about the origin of the word bank, what was the concept behind the formation and this introduction to this word bank, why the name word has been taken, from where this word bank has derived, and the literally meaning of all these terms, right? So in today's video, what we are going to study is the concept and definition of bank. Right. So we'll start with the meaning and concept of banks and banking in a step-by-step process way, right? And then we'll be coming to what are the various ingredients that are the primary requisite of what we mean by the term banking. Then we'll come with the formal and legal definition of bank, and then afterwards we'll be coming about the brief history of banking in India, right? So we're starting with the meaning and concept of bank. As far as the first, in general sense, if we talk about what we mean by bank is that bank is a financial intermediary that accepts deposits and channels those deposits into lending activities. That we have already seen that the major primary functions of a bank is to accept deposits by different modes. These modes are like your savings account, current account, that we are going to discuss in detail when we will be studying these topics, the various deposits account, right? So bank is a financial intermediary in the terms that it is acting in between, it is playing the role of intermediation between the two parties, one who are having extra funds to deposits because of any reason, right? That may be the safety of the funds, or maybe in order to earn higher rate of return on their investment or on their savings, on their extra amount, and the same amount is being channeled. Banks channels those deposits into lending activities, and when we talk about lending activities, we mean by that it is loans and advances. If entire funds, and if the funds are not lent in the lending activities or loaning activities, or in the form of loans and advances, either directly they'll be handing over it to the customers or the loan seeker by loaning, or indirectly through capital market. Here capital market means they are going to invest the amount, right? So there are two aspects which have been highlighted in this particular line, in this particular para about banks, is that banks accept deposits, and those deposits are being turned into lending activities, and lending activities again form into two parts: directly by loaning activities, which means in the form of loans and advances, and indirectly through capital market by going directly into the primary or secondary market to purchase securities, to deal in the real estates, to go for giving the money or lending the money to RBI, or investing in any of the avenues, opportunities, right? So this is the first, which highlights two: accepting and lending activities, right? Now another concept of bank or banker or banking is that anybody who involves in this kind of deposit cannot be termed as bank. A banker need to be a person or a company carrying on the financial businesses, like that receiving of money, again the same thing, acceptance of deposit from the public for the purpose of lending on investment. But one thing has been added here which makes it complete in its own sense, which means that all the money which has been taken or accepted by the general public, by the bank, will not be going into the lending or investment activities. The money has to be with the banks. need to be remain with the banks in order to maintain the liquidity position. Why? Because the banks are also asked to repay when it is demanded by them. So the last line that is shown in the red, when it is demanded by them, it is one of the most important function. It forms the one of the most important ingredient that not only accepting deposits and granting of loans and advances directly to loaning activities or indirectly through capital market forms the functions, but banks are also advised to repay the amount which has been accepted by the general public whenever it is demanded by them. So there are different modes of the demand, and these demands includes with the help of checks, with the help of other modes of withdrawal, right? So when the customer is demanding his or her money back, so the bank cannot say that I have directly put the entire money in the loaning activities or I have invested the entire amount. So in order to maintain the liquidity position, the banks are also advised to repay the amount whenever it is demanded by them. Demanded by them, which means the customers, right? Now, the again continuation, if we talk about general in layman language, if we talk about the simplest meaning of the word banks talks about, it is a place for the deposit of money, but it is not exactly the same which is being shown in this image, right? So it is a place for the deposit of money. It is the physical place where the money is kept for safekeeping. It is the place where money is being deposited by the customers for earning higher rate of return. And if we go by the technical meaning to it, which adds further inclusion in that particular three of the meaning and concept we have talked about, is that it is an institution generally incorporated, which means it has to take care of the various laws, the company's laws 1956, right? It has to be incorporated. It is an institution or a body incorporated, generally incorporated, which is authorized to receive deposits of money, to lend money. And why they are receiving money? In order to lend money, again directly with the loaning activities and indirectly through capital market, right? And to issue promissory notes, usually known by the name of bank note. Here we are referring it as from the RBI side, that banks has also, RBI has the power of issuing bank notes. So they are also issuing promissory notes, say for example like bills, checks and other things. So an institution which is generally incorporated in the eye of law, that has a legal existence, which is authorized to receive deposits in the form of money from the general public. And why they are receiving? They are receiving it in order to give them back in the form of loans and advances, right, to the loan seekers. And they also have the power to repay when it is demanded with the help of these promissory notes, bank notes, or I should say check and other modes of withdrawals, right? So basically banks, the entire concept of banking revolves around few of the things in order to highlight, that is place of safekeeping, place of deposits, place of where money is being deposited by the customer. They are accepting deposits. They are accepting deposit because they want to give it or lend it to loans and advances in various formats, in various modes, and directly through loaning and indirectly through capital market. And they also need to have maintain the liquidity position of banks, because whenever it is being repaid, whenever it is being demanded by the customers, the banks need to repay. And it is a body which is incorporated in the eye of the law, right? So we talk about the definition of bank. The formal definition of the banking talks about, which is given by Banking Regulation Act 1949. It talks about that banking means the accepting for the purpose of lending on investment of deposits of money from the public, repayable on demand or otherwise, and withdrawal by check, draft, order, or otherwise. Now, this definition is complete in its sense and defines the entire banking function, the entire working and nature of the banking is given in this particular definition as quoted by Banking Regulation Act 1949. So we are going to break this particular definition into point by point. We are going to explain it in this particular thing. So we have seen the definition that it means the acceptance. Now coming point by point the explanation about this particular definition. So banking means accepting. What we are accepting, why we are accepting. So the accepting, why we are accepting the funds. Now the question is, banking means accepting of what? Accepting of the public fund, accepting of the amount which is deposited by the public. And why banks are accepting? Banks are accepting it. Now this is the breakup of the entire definition. So it's important to understand, we are accepting. The banking means the accepting. Why banks are accepting? For the purpose of lending or investment. So we have studied that banks are accepting deposit for the purpose of granting loans and advances. And when we talk about lending, we means directly through loaning activities. It means loans and advances. And when we talk about indirectly we are talking about investment. So banking means the accepting for the purpose of lending or investment. What banks are accepting? Of deposits of money from the general public, right? Repayable on demand or otherwise. Accepting for the purpose of lending or investment of deposits of money from the public, but it has to be at the same time, it has to be repayable on demand. Repayable on demand means that whenever the customers are demanding their money back from the bank, whatever they have in their accounts, so bank has to repay that particular amount to their customers, right? Or otherwise means it's whether it's on demand or otherwise, which means that sometimes in case of FD and RD, there are cases when the customers are not demanding their amount, but then also after the maturity of that particular time period, because FD and RDs, they are known as the term deposits, and after those specified term, after they get matured, after the term got expired, automatically the amount will be credited into their account, right? So repayable on demand or otherwise. Repayable on demand means whenever the customer is demanding the money, also banks are giving them back, repaying the amount, or otherwise, which means after the expiration of the fixed tenure, right? But this repayable on demand does not mean that you're giving a call to the branch manager, or you're giving call to the bank manager, or any of the banker, and then asking late at night, early in the morning, on Sundays, on 15th August, or any other public holidays. No, this repayable on demand function can be executed with certain protocols, and these are known as and withdrawal by check, draft, order, or otherwise, which means that this repayment on demand can be made by specific modes, and these specific modes with the help of these specific instruments which are known, and that can be withdrawal, that can be repaid by a bank only and only with the help of by check, draft, order, or otherwise. So if we club all these things, we'll get the definition in this particular format that talks about that banking means the accepting for the purpose of lending or investment of deposits of money from the public, repayable on demand or otherwise, and it is withdrawal by check, draft, order, or otherwise, right? So this is the entire breakup of the definition. Now it covers the entire functioning. It covers the entire mechanism of what banking in India means and its deals about, right? So it is accepting for the purpose of lending or investment of money from the public, which is repayable on demand, and that repayable on demand can be made with the help of check, draft, order, or otherwise. Here check refers to that instrument which is very helpful in withdrawing from the account. Draft means demand draft and manager's check. Order means your pay orders, and otherwise means any other mode other than these check, draft, order, right? That can be debit card and ATM cards, etc., right? So this is the summary of the this is the breakup, point by point breakup of the entire definition which is given by the Banking Regulation Act 1949. So this is as far as the meaning, definition, and concept of banking is required.